Are you focused sort of strictly on multifamily now, or you're still kind of working within multiple asset classes? What's your main, I guess, bread and butter at this point?
There was a book called The Blue Ocean Strategy. The blue oceans being the ones that have higher barrier of entry and less competition. Red ocean being, lower barrier of entry and lots of people playing in that space, right?
Yeah.
I like the complex, challenging things. And so, the asset class that I'm mostly focused on right now would be shallow bay, small bay, industrial IOS properties, industrial outdoor storage, and then working with many different groups on trying to figure out this data center landscape here in the Kansas City metro area.
Now, maybe more than ever, diversification is really important, I think, in an investment portfolio. Maybe one of the best parts about, this podcast is that I get to talk to a lot of different people and hear about different asset classes.
Industrial outdoor storage since 2020 has kind of emerged as one of the strongest performing industrial real estate subsectors nationally. Rent growth of 123% since 2020.
Not bad. Hi, everyone. I'm Jason Balara, and this is the Know Your Why podcast. Today, I'm here with Logan Freeman. He's a commercial real estate broker, investor, and market analyst based in Kansas City, and the founder of Midwest CRE Advisors. Logan, we know each other, I guess, from LinkedIn as much as knowing each other counts on. We have never met in person.
Yeah.
But I'm thrilled for this conversation. Thank you so much for coming on the show today.
Yeah, man, I've been following your content on LinkedIn, and I know that we've been wanting to get this scheduled for quite some time, and that is totally on me for taking as long as it has. But you know what? I'm glad to be here, excited. Just been an absolute blistering start to 2026. I couldn't be more excited about what we're trying to accomplish and how we're doing it in the industry. And, God is good and is definitely blessing me and the people around me.
Love it. Well, let's just start with your background. Tell us a bit about yourself. Assume that maybe they haven't seen all your LinkedIn posts.
Sure.
And so people can get to know you and what you do, and then we'll dive in from there.
Origin story for me is Midwestern boy, grew up in Jefferson City, Missouri, which is the capital of Missouri. Town of like 35,000, 50,000 people. I always kind of say that if you read Carol Dweck's book, the growth mindset versus the fixed mindset, it's really kind of a fixed mindset place, but it's not a bad thing, right? It's just not, if you are wanting more, striving for more, sure you can find it, but it was more like a safe place to be. And for me growing up, that was fine. My mom and dad needed a safe place to be. And I look to Jefferson City as a safe home, and it was a great place to grow up. But I've always had this fire within me that wanted more. So when I was 14 years old, man, I was like, man, I got to get out there and start doing something. I've been a very active person my whole life, not really just sitting still ever, right? Diagnosed with ADHD and OCD early on in my life. And, I've been able to direct that and frankly think it's sort of my superpower now in regards to some of the talents that I have cultivated into strengths through discipline and focus and achievement and competition. That being said, I identified as an athlete, that was a big part of where I put a lot of my energy because, I knew that if I wasn't able to channel this energy somewhere, which I baled hay in the summers, I worked at a catering business, washing dishes, learning how to fry chicken, cut up food, it's where I learned how to cook, which is one of my favorite things to do. Well, really eating is one of my favorite things to do. And I like to eat good food, so might as well learn how to cook, right? So, for me going into, high school, I was going to be an athlete and then I got into college and, I was a collegiate athlete, but at the University of Central Missouri playing football. And, I definitely had the opportunity to go Division I, but really needed a strong scholarship. My dad was one of 13 brothers and sisters, full Native American, North Carolina, one-bedroom house, tobacco farm, you name it. That was where my dad was from. Moved to Missouri because he was one of the younger ones. I think his older older brother was like 20 years older than him, 25 years older than him. So I moved to Missouri with him, met my mom here in Jefferson City. And, one thing that shaped me growing up was my dad's battle with drugs and alcohol and addiction. And, I think it was 12 years ago, in January of this year, I lost my father to his battle with that. And that really changed me. I got picked up as an undrafted free agent with the Oakland Raiders. I went out to football camp and beat out some guys and stayed, but ultimately got cut and went back to school, finished my master's degree. And, after that, I had to get a job. So, all I'd done is worked in kitchens, poured concrete, baled hay, used my body to make money. And so I got a job making 265 cold calls a day during my master's program. So I'd work all day and go to school all night and spend Saturdays in the library just catching up on homework. And I'd say that like this was big transformation because I went from 335 pounds down to 219 pounds. So lost like 120 pounds in 6 months. But probably the bigger transformation was, in my mind. This was pre-podcast, really. I mean, Lewis Howes and John Lee Dumas were out there, but I was listening to Jim Rohn and Zig Ziglar and Brian Tracy and Tony Robbins CDs. Man, I had the CDs. And I guess I'm aging myself now. I told somebody the other day, I was like, I've been barbecuing, briskets for 20 years now. Can you believe that? So it's one thing I'm known for in Kansas City is my brisket, my Wagyu brisket. But anyways, I can't believe I've been doing that for 20 years, like, holy cow, like I'm that guy now. I can literally say I've been doing something for 20 years. But, I finished my master's degree. Right after that, my dad passed away. And so, I'm this 24-year-old sitting there, no longer an athlete, lost 100 pounds, gone through this mental transformation, and then my dad passes away. And so there's like these decision points and I think Robert Frost talks about it, taking the path less traveled, right? And so I moved to Kansas City and, I took a job. I had a job for 4 or 5 years in Kansas City. And in 2017, ultimately I was fired from my last W-2 job. And that's when I really got started in business for myself, real estate, as well as sales consulting. And I've been doing that since 2017. So almost 10 years now. And, have done close to about $450 million in transactions spanning 265 single-family homes, office buildings, industrial property, land, lots and lots of multifamily, retail properties, and now working on building out a full-service development arm of our brokerage. We have development services. We do a lot of brokerage. We do leasing of commercial real estate, and really positioning myself to figure out what these trends are in Kansas City, and figuring out how to sell the 49ers shovels. And, that's what I'm learning right now in the data center world and a lot of this flex industrial and small bay industrial side of the business. So, I've been blessed. I have 3 children. My wife and I have been married for, 8 or 9 years now, and we have 3 beautiful children. Hope to have more. I see your daddy stuff behind there, so that's amazing. I've got a lot of mine sitting here on my desk as well. So, right there it is. That's right. It's very important to me as well. And what I'm on the journey now of is, how do I become the best real estate knowledge and connector in Kansas City? And with the adoption of artificial intelligence, the speed of execution, and the opportunity that Kansas City is presenting, the recipe is there, and I'm just grinding it out every single day and loving it too. So that's my background. That's what I'm doing now.
It's fantastic. Thank you for that too. And there's so much there to that I'm sure applies. Like everything carries forward, right? We have our life experiences and all that. And you mentioned, the 265 cold calls a day.
Yeah.
All of that stuff plays into what you build over time. One thing that I'm just going to pick a place to start, but one thing that you mentioned here, and I've noticed just from your LinkedIn, you're very big on Kansas City. Like it's I'm not sure that I've seen a lot of people advocate for one specific market with so much like certainty and confidence around it, which is pretty cool. I, honestly, like the comparison I get is people love to tell you how bad it is to work and invest in California. That's the other strong opinion that I think that
Yeah.
goes like very much, which living in California, I think is a bit of a I don't know if it's a mistake, but overstated. But Kansas City, I mean, tell me why. Tell me, I know you're there, but I know you have kind of strong beliefs around the market itself. Tell us a
Sure.
little bit about
Are you planning a remodel or construction project? Overwhelmed by the process? Over budget? Extended timelines? Strained relationships? We are all too familiar. At Lark Construction Services, we help homeowners and business owners take control of their construction journey, from reviewing bids and contracts to catching red flags before they become costly mistakes. Our Clarity Audit is a one-on-one expert review of your plans, estimates, or current progress, giving you the peace of mind and a defined action plan to move forward with confidence. Don't let confusion lead to costly errors. Visit larkconstruction.com and schedule your free call today. Lark Construction Services, saving you time, money, and stress.
Well, I think first and foremost, I'm an offensive lineman by trade, right? So fundamentals. And so I'm always looking at fundamentals of real estate. And the fundamentals of the middle America it's what keeps the United States moving. You can reach, 85% of the continental United States in a 2-day truck drive from Kansas City. Outside of Chicago, Indianapolis, and Dallas-Fort Worth, we're the largest industrial hub in the Midwest. Right? We've got tons of rail coming through here. We've got intermodal. We've got agriculture. And then you start to look at population growth. We've always been around 0.76 to 1% population growth. I mean, we're talking about an MSA of 2.5 million people. So we're adding 20 to 25,000 people every single year. And then you look at the fundamentals of, well, what's the multifamily that's been developed, right? Well, we only develop close to 4,500 to 5,500 units every single year, and we're absorbing those units. And it's why Kansas City, the MSA, has continued to be on a top 10 housing market because we're not overbuilding. And so the fundamentals of that are strong, which then turns into good occupancies and year-over-year rent growth between 2 and 3%. All of those things create certainty. And for investors in real estate and business, that is what they need is this certainty to make decisions. And so I think that with where we're at in the business cycle and the real estate cycle, lots of capital, lots of allocators looking for certainty in the market, not big upswings and not big drops. And Kansas City, Indianapolis, certain parts of Ohio, places like that, Arkansas, they've always had that nice consistency. And then you start to look at affordability. You start to look at the demand for jobs and people, being able to fund those jobs and be in the workforce. All of those things are fundamentally still pretty strong in Kansas City. And then you start to throw on teams winning sports things and Taylor Swift and, our arts district and barbecue and jazz. And there is some cool components, right, of Kansas City as well. The first women's soccer team to have a stadium, right? Now the FIFA World Cup coming to Kansas City. All of those economic drivers put more of a spotlight on Kansas City. But I think that what really drives kind of my passion is, one, I live here. I'm able to utilize my own backyard as somewhere where I can learn and really dominate and understand the demand drivers and where infrastructure is moving to. But then you have some of those larger scale macro environmental things happening that drives attraction to the city, and that creates an environment that transactions want to happen, development needs to happen. And if you look at what's happening in regards to development in the Kansas City metro area, you can't hardly look at a new location like the West Bottoms or with what's going on in the Legends or out in DeSoto with the Panasonic battery plant that just dropped 4,000 jobs in a $4 billion battery plant in the middle of Kansas, right? Like that's just those things have big ripple effects, and the ripple effects then trickle down to commercial real estate. And so I think that creates opportunity. And with me being here, I'm able to really see that and be the boots on the ground and not just look at market reports and, stats, but actually go see these things in action. And so it's not without challenge, right? Like Kansas City, we still have a lot of challenges, just like a lot of growing cities do, that we need to figure out. And I'm hoping that public policy and private investment will come together. And there are certain nodes of the city that's done that very, very well. And, our educational system needs to be really revamped and continued to be good so we can keep people in Kansas City, Missouri, instead of them moving to, across state line, right? We're one of the only markets that I know of that has what we call this border war. So, I live on state line roads. So you throw a baseball and you're in Kansas. I live in Missouri. And what we have seen is incentives for developers to, develop new projects from across state lines to then attract businesses and people to those places. And, you're not really adding at that point. You're just shifting where the chess pieces are on the board. And that really doesn't help the metro area very much. So we do have this kind of unique border war going on. But if you think about it from the fundamentals of commercial real estate, that creates opportunity as well. So I think that's the reasoning behind it. And, I think that the fundamentals are the main reason and the driver of why so many people have started to look at Kansas City for commercial real estate investing.
Yeah. And this is, folks listening, certainly should follow you on LinkedIn, because this is the kind of stuff that you put out on LinkedIn and the way that you talk about Kansas City. If someone has any interest in it, you make it very compelling with your passion and data. So I think it's all of that, makes a ton of sense. One thing I heard you, sort of talking about some of the stats and growth and all of that, and those aren't like crazy, outrageous numbers. And if we look back to 2021, 2022, everybody was like, oh, everybody's moving to, Dallas, Fort Worth, and it's growing at 15% a year. Like there was all of this stuff. And then people kind of jumped into that. And that has really, those have been the areas that have pulled back so much. But the consistency of a market like Kansas City sounds like, and you mentioned it, this certainty, I guess it's hard to say certainty in relation to investing, but when you have steady incremental growth, not like big jumps and drops, and it definitely is probably about as close as you can get to kind of a certainty type of investment strategy. So I really do enjoy the way that you talk about Kansas City. This is a total aside. The Chiefs are moving, right? The stadium's moving. That's one of the border war things. Is that
absolutely? Yes.
Yeah, it's. I was when you said that, I immediately thought of that they're basically just moving across state lines. So you've worked in a lot of different asset classes. Are you focused sort of strictly on multifamily now, or you're still kind of working within multiple asset classes? What's your main, I guess, bread and butter at this point?
So our team has 9 people on it, and each one of those individuals has a specific focus niche that they focus on. I have a breadth of knowledge across a lot of those asset classes, but I would say that honestly, multifamily is probably one that I spend the least amount of time on, only because there was a book called The Blue Ocean Strategy, and the blue oceans being the ones that have higher barrier of entry and less competition, red ocean being lower barrier of entry and lots of people playing in that space, right?
Yeah.
I like the complex, challenging things. And so, the asset class that I'm mostly focused on right now would be shallow bay, small bay, industrial IOS properties, industrial outdoor storage, and then working with many different groups on trying to figure out this data center landscape here in the Kansas City metro area. But that's not to be said. Yesterday we closed a 44,000 square foot medical office building. We have land under contract right now, two tracts of land under contract that's going to be for development, one on the industrial side, 2 on the industrial side, 1 on the residential side. We have 3 multifamily listings active right now. We have, all kinds of different projects. And, my job is to be kind of the top of the funnel, educator, and I bring 10 years of relationships. And when a client, calls me and says, hey, I've got this property and this challenge that I'm trying to work through, I'll give them an honest assessment if that's the right assignment for myself or somebody on my team, or I'll refer that business out, right? And so I think what I have been able to sort of prove out is this same model that Ryan Serhant is taking on the residential side, and Bob Knackel on the commercial side, which is kind of building this media company alongside a brokerage or a real estate investment company. Yeah. And I think that's important because, attention is the new currency. And so being able to, and my job as a real estate broker and developer is to be able to create a market for something that wasn't there prior. So I need to craft a story, understand the fundamentals of it, understand the supply and demand, and then actually go generate and create an audience, and then have a sales process that's going to help generate the right client to purchase that property or invest in that property. And so, I think that what I'm able to do now is utilize digital marketing and social media and presence in a way that's a little unique in getting visibility to maybe a more challenging real estate deal. I do not sell the 250 unit Class A multifamily properties in Kansas City, right? Yeah. I have clients who have those assets and they utilize a different brokerage that specifically focuses on that, right? I'd be doing them a disservice if I could say, I'm going to be able to create the same competition as somebody that's all they do, right? But like if I get, a project that's a boutique hotel or, a high rise in a small town or, a lot of multifamily in smaller tertiary markets, I've proven now through many different client success stories that I'm able to go find and tell the story and find the right buyer for that asset. So that's what I really enjoy doing. I kind of look at myself as a storyteller and a digital marketer, and real estate is kind of my product that I sell.
Yeah, makes sense. This industrial outdoor storage. Let me back up a little bit. I think now maybe more than ever, diversification is really important. I think in an investment portfolio, and so maybe one of the best parts about this podcast is that I get to talk to a lot of different people and hear about different asset classes. And so I've been very intrigued by that space. And I would assume we're talking like triple net lease type of properties. I think all of that is really compelling from an investment standpoint. Again, from that space of safety and certainty, right? Where you have a triple net lease, basically the tenant is paying everything, and you don't have to absorb a lot of the problems. You've got steady income coming in. Where does development tie into this? I guess maybe first tell me a little bit about like at what level are you involved in the development? If it's just a brokering the land transaction, or are you actually developing it? Like how is that working for you?
Yeah. So, industrial outdoor storage since 2020 has kind of emerged as one of the strongest performing industrial real estate subsectors nationally. Rent growth of 123% since 2020. Right. I mean, that's more than double the 58% increase in bulk warehouse rents. And so, I think that and vacancy rates still remain around 5%. I mean, there's about 1.4 million acres of this product type nationwide, right? And so, that's attracted a lot of capital for that product type. What I will say on that is there's a lot of key drivers in regards to the scarcity of well-located sites because of zoning constraints, right? I mean, high flow logistics and asset-intensive operations like construction and equipment, trailers and containers. Then you've got intermodal and port-related demand, right? And then you've got a lower cost alternative to enclosed warehouse space, and so that's created a lot of institutional demand for this product type. Those are the tailwinds that I like about it. Where I'm focused on from a development standpoint is, can I find, these properties that are either grandfathered into the right zoning? So you have to have heavy zoning, right? Almost like a salvage yard zoning, which is very difficult to find. So it's like usually M4 or something like that, very heavy zoning, right? And you want to be next to highways, right? Because you need that access to highways because a lot of them are moving, or trading, having trailers on site and moving trucks and things like that. So there's a limited supply of it, and it's not being created. It's a similar kind of strategy of mobile home parks, right? There's actually the demand is actually higher because the supply is not only not coming, it's actually dwindling because those properties are being taken and developed for something else. So on the development side, what we'll do is we'll try to find land that is, near a highway that has the zoning but may not be utilized as that for the use right now, right? So been able to find a couple of those projects. And then on the actual development side, what we do is we'll work with a landowner who wants to that owns land that has an opportunity to put a site plan together, and we'll go in and do a market study, a feasibility analysis, and figure out, hey, we think that you should start with 48,000 square feet of building. Let's keep them under 12,000 square feet, put the bays at 1,500 to 2,000 square foot, because you don't have to sprinkle the buildings in these municipalities if they're under 12,000 square feet, so your costs are going to be way down. Rents are probably going to be somewhere between 13 and 15 bucks triple net. Hard costs could be anywhere from 75 to all the way up to 150 bucks, just depending on the level of finish that you're looking to do. And oh, by the way, Bonner Springs is going to be a lot different than Overland Park, which is going to be a lot different than Raymore, Missouri, on what they want the product to actually look like, which is going to influence your cost to build that. And then what's the actual demand? So how many new jobs are being created? How many new businesses are being started? Where are the new households being formed so that you can go attract either a hobbyist or somebody that is actually serving those residential neighborhoods, right? And yes, we are pre-leasing these projects, we are investing in these projects, and we are managing the pre-construction and pre-development feasibility part of this. And I love that because I don't have to necessarily run point on the construction side and meeting with all the municipalities, but I'm able to bring my expertise in regards to what should be built, how much of it should be built, how fast, how do we pre-lease it, how do we actually get it leased up, managed, and then work on the actual exit strategies for those real estate deals. So we're working on an 85,000 square foot flex industrial property here in Kansas City now that hopefully will break ground around April. And, it's a really interesting asset class to be involved in. And what I will say is the iOS component has just been a bolt on, right, Jason? So the idea was small bay industrial. But what we found was, hey, there's nowhere for overnight parking. Hey, I need an acre of land just to store some things on. Okay, well, what can that rent for, right? Well, the U.S. average for iOS is anywhere between $3,500 and $6,500 per acre per month for yard storage, right? So that starts to be extremely advantageous for these developers. And then we have to figure out, well, what's the blended lease rate between what's on the building and what's on the yard? And then what fences need to be in place and access agreements. So you start to see that there's a lot more complexities than just taking a 16-acre site and putting a metal building on it and putting a yard there. How do you maximize it? How do we make sure that, and we have to work with MoDOT quite a bit and KDOT to make sure that the access agreements into the properties are good. So we might have to, make a new turn lane and things like that. And then not to mention the environmental components of all of these real estate deals as well. There's a lot of cleanup that has to be done on these properties too, and they may have to be monitored for a period of time. So, though it takes a level of expertise. So again, going back to that blue ocean strategy, I see a big opportunity because the demand is there. The supply is not only not being created, it's dwindling. And if you can do 3, 4, 5 of those deals a year, there's absolutely a market for it. And that's what I want to play in, is a space that has, the opportunity to have, the trend is your friend, and making sure that you're playing alongside that, not pushing against it, is probably my biggest lesson learned just in real estate in general over the last 10 years.
Yeah. Thank you for that explanation. I think you touched on data centers earlier. What's that look like there? Like, is it a high concentration of data center in Kansas City? Is I guess I've been there once. Like, the amount of space that is there for development, or I guess development in any way. But I know you want your some of these things that you're talking about, you want them along highways, but maybe a data center doesn't need to be specifically on the highway. I mean, is there a high concentration? What's the opportunity look like there for data centers?
Well, we have definitely we have a good infrastructure of data centers already. We have a big cave system all around the Kansas City metro area, lots of data centers underground. But we have started to see the hyperscalers move into Kansas City in big ways, and the only reason for that is the states, the cities, the municipalities have to welcome them, right? That's the number one thing. Is if you are going to bring a $3, $4, $5, $6 billion project in today's environment, it has to be incentivized for it to make sense. So, you have to start at the municipality level. So what we have done is, targeted specific areas that are welcoming data centers and have a program for data centers. The problem with it being is, nobody's grid for electricity is where it needs to be able to handle any of these, right? There's a lot of pushback on these things too. But if you take DeSoto, Kansas, for example, they, in 2021, 2022, started building a $4 billion EV battery plant. Well, that took a lot of infrastructure. If you drive around like I did yesterday, the Panasonic plant, the KV lines, the infrastructure that has put in, it is like monopoly. It is unbelievable to see, right? And so once a big mover like that happens, then precedent has been set. Infrastructure is in place. It can be tapped into. New substations are built. We know that the city wants to incentivize that type of economic development. So another, data center has been announced near the Panasonic plant. More are to come, I think, in the future. And so what we do is track infrastructure. And then that not only do you have to look at from a municipality standpoint, then you have to get it zoned by right? So you have to understand zoning and air permits and all of those components. And so what we're doing is helping a few landowners aggregate specific land in areas around infrastructure where municipalities have said, yes, we would welcome a data center. We'll give you the zoning. Infrastructure is here. Now we have to work with the power company to understand how long is that feasibility interconnectivity study going to take? When is the power actually going to be available? That is one strategy. The other strategy is finding vacant buildings that either were industrial buildings or maybe even high-rise office buildings that have a lot of that infrastructure already in place, right? So you're talking about big power loads already allocated to those buildings. And we're talking about megawatts of power here. So, for example, there was a property on a 101 Holmes Road in Kansas City, and they had 10 megawatts of power. I think it was Cogency Data Centers was one that came in, bought that property, got a data center up and going. And man, they were able to sell that between $5 and $6 million per megawatt. So, the idea being, if we can go target some buildings that already have some power allocation, let's say 8, 10, 12 megawatts, maybe they have the switchgear in the property that allows for an upgrade to 12 to 15 megawatts without having to go to the utility company to ask for more. Now we have something because we know what it's going to cost to convert it to a data center. We know what an edge data center, an AI data center will be able to pay per megawatt. And if they can get speed to power because the power is already there, they're willing to really pay for that. So there's kind of two strategies within the data center play. It's the hyperscaler land play, which is a long-term development. And then there's conversion opportunities for office buildings and large-scale industrial properties that already have power allocated to them.
Yeah. What you just described, the way you just described that, people listening, this is I think only this level of detail and knowledge is only achievable by hyper focusing on your local market like you do. I think that there is this is, I mean, such a good illustration of what's important to know. Like the reason part of the reason I touched on data centers is we just acquired an electrical company. So data centers are very interesting business opportunity for
Absolutely.
me as well. But the point is, in part of this is like, I've started to look at, there's a lot of talk about long distance real estate investing, and certainly there's value to that. But the granular detail that about Kansas City is, I think, really just like it sets you apart and defines kind of what people looking to transact or develop or in that area, what they need to know. Knowing, that the power's already in these buildings, like all of that stuff that you just kind of rattled off is things that need to be very well understood to especially develop in a market. And it's which municipalities are easier to deal with and which are not. I mean, there's just, and it's I'm scratching the surface of what you have in Kansas City, trying to kind of develop that within the LA area for our electrical company. And it's like there's certain cities that are under the LA city LA City County, basically. There's LA City and LA County. They have different zoning regulations, different rules, and then there's little pockets. How, like Burbank, for example, has an entirely different type of wiring that they will let you use. And so it's like, but the way that you sort of so easily just described all of those different nuances within the Kansas City area is what people need to understand in the type of especially in that development space. So I think it's such a good, I mean, just as a to not to toot your horn too much, but I mean, I think really truly people listening should understand, like, this is the level of detail that developers really need to know, and why it can be so helpful to either know your market at that level or have someone like yourself that does know the market at that level. So really pretty cool. Well, Logan, let me switch gears here. I want to make sure I get to ask you the questions I ask every guest. And the first is based on the name of the show being Know Your Why. So what is your why? I mean, you're obviously passionate about Kansas City, which is super cool. You don't see that a lot, but what is your why? And you've had a lot of success already. You were an athlete at a high level. I think all of those things definitely tie together. But at this stage in your career, kind of what's driving you?
Yeah, well, I mean, I think that to whom much is given, much is expected. And my whole why is to help as many people as I can to get to heaven, in that faith regard. And so, my Catholic faith is my number one, focus of my life. And so, I'm trying to inspire people to really live a life that is fulfilling. And I think that for me, showing them that, like, this discipline, this focus, this professionalism, is cool, right? And, when you do focus on that versus what the world is going to tell you is important, I think that you can have a much more joyful life. And so, and that now being a father of 3, hopefully more in the future, I definitely want my children to be a representation of that, right? Like, I don't want them, I'm not going to say the right thing all the time, but I can guarantee you ask any of my kids, maybe not the 2-year-old because she's still too young, but my other 2 kids, what does daddy do, every single day? Well, he gets up, he works out, he prays, he goes to church every single day, and he goes to work, right? And then he's here with us, coaches my soccer team, got basketball, football, all of the things. So, I think that for me is important. It's my mission is to, really inspire people to have a relationship with Christ and try to do that through my work and through the way that I live.
Yeah. I think it's very evident. I thought it was evident just from LinkedIn, but just getting to talk to you here during this podcast, it's very evident. And I think I have interviewed a number of, athletes on the show that it's always very clear to me how that ties in. Like you mentioned being an offensive lineman, like the focus and the attention to detail and like the drive to just keep like perfecting that craft. Like, I think that plays out so much in athletics that, rarely, I mean, Travis Hunter is maybe the most recent example of someone playing 2 different positions, but like rarely do you hear about people playing, multiple positions or multiple sports because at a high level, because the reason you get so good and get to play at that high level is because of that focus and drive and sort of singular attention to a specific thing. And now you're applying that exactly to your, brokerage and real estate career. And so it all just ties in very well. To me makes a lot of sense, I think, is in terms of, your background and everything. So I just think it's super cool.
Well, I think that I appreciate you saying that. I think that what I'm trying to be is a professional, and, there's, I've got picture of Kobe up here. I've got Tim Grover all over my office, and listen to him and Andy Frisella and Ed Milet on a regular basis. So those guys didn't get to the level that they were by just having a hobby, and, the most recent probably example of this is, Alex Hormozy. And I think that if you follow his content and his advice, it's, this is a tough business to be the best at. Just business in general is tough.
Right.
And you will not be the best at everything. So you got to pick the right model, pick the right business, and then you got to do it for a very long time.
Yeah.
A very long time. Yeah. And that, unfortunately, is not what a lot of people really want to hear. But just all the stats and things that I rattled off, I mean, that's 10 years of knowledge that I've just aggregated into a 25, 30-minute session here, right? And it's every single day. I don't have hobbies that I go and spend a lot of time on. This is my hobby. And then because I'm trying to be a professional at that. And I think that if you take that approach, and have a long-term perspective, you can really be great at anything. But most people fall off because there's this period of time where you start acting like a winner, and you've made the decisions, and you're making those decisions and doing those habits, but the world doesn't show you that you are a winner yet. And that's what we call the lag, right? And that lag period of time is like this period of time where you're like, man, results really aren't showing up, and it's how long can you live in that lag without having a positive feedback loop and keep doing the same exact thing that is the right thing to be doing, because the world is going to tell you, hey, you haven't got your results yet, you need to pivot and change. When all reality is you're 5 feet from gold or 3 feet from gold, like Napoleon Hill said, and you just need to keep digging, right? So that's my 2 cents on that front.
No, I could not agree more, and it's a hard realization to come to. And it's funny. Like I love Hormozy too, and he talks about that stuff, just like you said, where it's like you read his stuff or you listen to him, and a lot of times what I end up feeling like is he's like, you think you're working hard, and then you'll hear him interviewing business owners, and he's like, how many ads have you made? How many ads have you made? And they're like, 10, and it's not working very well. And he's like, make 100. And they're like, 100. And he's like, it's always like, just work harder, longer is basically what it comes down to. And as you said, like, you're not going to have a positive feedback loop the whole time. In fact, mostly you're going to have a negative feedback loop. You're like, I'm tired. This didn't work. Now I'm dealing with this other mess. But the way that you get to, as you said, be that professional is keep going.
That's right.
Okay, work harder, work longer. Like, that's it. And I think it applies to everything, right? You can talk about business, your family, kids, like being a good husband, being a good dad. All of it is the same. It's like, okay, I wasn't good today, but I can be better tomorrow, and like make that difference with my kids or my wife or whatever. So, this has been great. When people hear this, how can they connect with you?
Yeah, I'm really active on LinkedIn. So Logan Freeman, Mr. Kansas City. My website is www.mwcreadvisors.com. But I'm pretty active on LinkedIn. Send me a DM, follow along there. I'm there every single day. Yep.
And I can attest to that. That is a true statement. So Logan, thank you so much for coming on the show today. Really enjoyed the conversation. Thanks for sharing all that you did. And I really, truly appreciate it.
Pleasure was all mine, Jason. Thank you for having me.
Absolutely. Folks listening, make sure you connect with Logan. Like I said, he will respond to you on LinkedIn, and really valuable content anyway. So please like, rate, and review the show so we can continue to get great guests. And as always, thank you for listening.
Hey there, I am Dr. Jason Balara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?